Hello and welcome, everybody. My name is Andrew Geisel, co-founder of Citizens Coffee. We're here today with another installment of our investor webinars. Should be a really great little presentation. We're going to be covering a bunch of stuff, company updates, progress reports. We're going to be looking at some behind the metrics ideas and learning the Citizens model a little bit better. And we also have Justin, my co-founder, on the call with us as well, who's going to be leading a short segment on the investment opportunity of our current raise on Start Engine. Just quickly again, guys, we're all really thankful for your time. We're thankful for your interest in our company and for your interest in becoming an investor with us. We're just going to give it a couple more minutes for everybody to join the meeting, and then we'll kick it off from there.
Awesome. Hey, everybody. Just a quick hello from me, Justin, Andrew's co-founder and CEO of Citizens. Just echoing what Andrew said, super excited to be doing another webinar with some really exciting updates on both our fundraising round and also some of the traction expansion that we're undertaking at Citizens. So, super excited to take you through some of my items in today's webinar, and then, as always, really excited to always field all the questions and perspectives on the brand. So just be sure to keep those questions coming through. As they come to you, feel free to just shoot them through in the chat. We'll collect all those questions and kind of field them at the end. So super excited to hear everyone's thoughts and to take you through some of our big progress at Citizens. So yeah, Andrew, I'll leave it with you to let us know when we're ready to kick off.
Will do. And guys, if it's your first time joining us, you'll see the questions tab on the bottom right-hand side of the screen. Like Justin mentioned, you can go ahead and drop your questions in whenever you're ready. At the end of the call, we spend about 10 or so minutes reviewing the questions and giving as much context and clarity on them as we can. So we endeavor to get to them all. There's sometimes a lot, so it's not always possible. Feel free to shoot any of those questions through. And we'll just wait one more short moment before we let Justin kick off. Alrighty, guys. I think we're going to hand it over to Justin without any further ado. Justin, you've got the stage.
Awesome. Thank you so much, Andrew. So, guys, I first wanted to just thank everyone for your time. We know everyone's super, super busy, and, we're always incredibly flattered at, a lot of the interest and questions and inbounds that we've been receiving. Our Start Engine and our investment round as a whole has started to really pick up a lot of momentum now. And over the past few weeks, we're starting to get inundated with a lot of calls and meetings booked. So, I think right at the top of the agenda is to give everyone an update on where we currently stand in our investment round. So, we're out in the market today to raise about $4 million to take us towards achieving our 5-year roadmap, which is 40 locations and $150 million of annual run rate sales. One of the 4 million is being raised on Start Engine, which is very much our public round, and what we're calling our community round, where we're inviting, Start Engine investors, we're inviting our own raving fans and customers to kind of join the ride, get on board. And currently we're just about to tick over $600,000 raised on Start Engine. So really excited to be further past the halfway mark now and over 60% fully subscribed. So we're expecting, as we enter our closing months, as we know with the platform, as we announce our close, we're really expecting quite an upward tick of investment of a lot of folks who kind of get in before the campaign ends. So we'll be sure to let everyone know when that campaign is officially coming to a close. But we're anticipating, just given the momentum that we have, we're anticipating, in about 4 weeks, we'll be looking to close the campaign. So that's on the public or community side of the Start Engine raise. 3 of the 4 million is coming from more of traditional institutional investment. So Andrew and I are actually coming to you today, both sitting in New York City. We've actually flown from Texas, where we're actually about to launch our newest location in Austin, our newest market. We've come back to New York, and we're here to meet with a few prominent VC funds and also private equity funds that are in the consumer space. So we've got these two concurrent rounds working. The Start Engine, the community round, which is over 60% filled, and we're making a lot of momentum on the institutional VC and private equity round too. So we're expecting both of those rounds get tied up by the end of Q1 and allow us to really solidify the real estate pipeline that Andrew's got, in the makings, that he'll share more about today, and really get our roadmap expansion underway. So guys, that's a bit of an update. If you have any questions on the round and our progress, please shoot those questions through in today's chat. More than happy to hear everyone's thoughts and questions, and get your perspective on that. But let's jump into just a quick presentation. I know that we've got some of our existing investors on the line. I can see we've got some new prospective investors on the line. So I'll just do a quick, 3 to 4 minute presentation on the brand and who we are as founders. Just to introduce me and Andrew, you can probably tell by now by our accents, but we're actually born and raised in Australia. Before starting Citizens, we had the luxury of kind of growing up in a country like Australia. And if you've ever visited Australia, you'd know, but it has a really rich culture around cafe culture, health, and really at the forefront of the all-day specialty cafe culture. We're seeing a lot of Australian cafe culture now permeate the US market and global market. We're seeing, Starbucks really adopt the flat white and bring on, some dishes like avocado toast. So we're seeing that big national, global leading brands are starting to try and get a foothold into Australian cafe culture already. But we were very fortunate to be born and raised and start our professional careers in some of those leading Australian cafe brands. Myself personally, I graduated in accounting and finance, and that really sets me up to lead the Citizens brand today in the CEO role. So a big part of my role is really leading the brand in day-to-day corporate development, so building our leadership team. We know that if Citizens is going to really go on this journey of rapid expansion, it's all about execution. So a big part of my role is developing that leadership team to go on that journey. I also handle the day-to-day, accounting and the finance of the brand. So I work really hand in hand with our accounting partners, make sure that our reporting, our future expansion and financial map is always being updated and super accurate, and also overlook the product and the operations teams. To give a little bit of background about Andrew graduated from one of Australia's top architecture schools and really focuses on all things development at Citizens. So Andrew handles our real estate sourcing. He builds our pipeline. He develops and builds all of our sites and works hand in hand with all of our compliance teams. So architects, engineers. So Andrew's always pushing the Citizens brand forward, and I'm always managing the day-to-day operations as the CEO. We also enjoy an amazing operations team that we're surrounded with and that we're really, have the fortune to work with every day to build the brand alongside us. So guys, any other questions about us? Again, please shoot them through in the chat. Happy to share more about our backgrounds. So let's get into really what the gap is in the space that Citizens is trying to win. So when we first moved over to the US, one of the immediate shocks is the biggest gap that for healthy and craveable breakfast and all-day cafe fare. America was built on the American diner. And we really have a strong sense that, America, off the back of the success of brands like Starbucks and like Chipotle, America, the new generation is demanding a better experience around breakfast and cafes. One of the big case studies that we paid attention to is going back to Australia again. Starbucks entered the Australian market and was one of the first markets to fail in. It's not because Australians don't love coffee or love breakfast culture. In fact, we love it probably more than most cultures. It's that our cafe culture and technology was already so advanced, and the bar was so high of execution, better sourcing, better hospitality, better ways of finding technology to roast and serve coffee, that Starbucks really failed. They opened 80 stores in the early 2000s, and within 8 years had closed all 80. So, we really share that case study Not because we're not admirers of the Starbucks brand, but to show that Australian cafe culture really is at the apex and the forefront of cafe culture globally. So one thing that we've also noticed is typically when consumers experience a great cafe experience, a better breakfast and a better coffee, they really don't go back. And that's what we've seen with a lot of the folks that are really, big locals and frequenters of the Citizens brand today. That kind of leads us that the all-day cafe segment is now one of the fastest growing segments in food and beverage in the US market. Over 51% of US consumers are now seeking a better and healthier for you option as they go out to dine. That's up 10% from 2010. We're seeing the better for you and the healthier options really explode, and you can see it in brands like Sweetgreen, Carver, Dig. They're all IPOing and having really, really big kind of exposure and success because we're seeing this better for you segment just really explode. And we feel that Citizens is right at the forefront of that wave in the all-day cafe culture. So another big trend that we pay attention to that's a big pillar of Citizens is the specialty coffee. Specialty coffee is now exploding in the US. It's over 51% of US consumers seek out a specialty coffee beverage, which really goes beyond the Starbucks way. So we're seeing off the back of Starbucks, the new generation are seeking a better experience, a more premium product, better hospitality, better spaces. And again, we really see that Citizens on the forefront of that kind of next transition in the industry. So who are Citizens? Let us introduce ourselves a little bit. One thing about Citizens is that we're a real true two-in-one. We're a full-service breakfast restaurant concept, and we're also a full coffee shop to go with a bakery counter as well. When the brand is at its best, we see that these two segments come together. Just this morning, I was sitting in one of our locations, and there was a line all the way to the door of coffee customers getting their morning coffee and their morning croissant to go, while we had a whole dining room full of over 100 dine-in breakfast customers, really enjoying the experience. So we see this is a very untraditional model. It's two models under one roof, a QSR to go and a more traditional full service to stay. While those two models are really happening, we've also got, our food to go online business where we're across all the major platforms. We have our own platform natively built in. And so we see this really kind of dynamic ways in which our customers have an experience with the Citizens brand. We also see that those models cross-pollinate. You might discover us for your morning coffee and then become a breakfast dining customer and vice versa. So those two really cross-pollinate, really, really powerful to build our economics in a really fast fashion. Our customer base is incredibly diverse. We see customers that lean into the health conscious, young professionals, young families. We see that it's socially driven, millennials, all the way up through different customer segments. So, Citizens really appeals to a broad subset of customers. And when you need to kind of appeal to a broader subset because that's what brings a high volume of sales. One of our most recent and most exciting expansions is now we are also building a CPG division of the business. We've officially gone beyond our four walls and we've launched a range of CPG products, coffee pods, whole beans, and K-Cups. One thing that's pretty apparent to us is Citizens is establishing a lot of brand authority in the coffee and the breakfast space. So naturally, there's a really famous statistics that 83% of millennials want to buy from brands that they know and trust. So if we're already establishing a lot of authority in the breakfast and the coffee space, naturally when our customers see our products on the shelves at big distributors like Whole Foods and Kroger, we're going to be the natural choice. So, we're really committed to building Citizens as a brand that's at the intersection of restaurant and CPG. Guys, some of our brand highlights is we've got best-in-class AUVs, average unit volume. So currently our brand averages at about $2.6 million per location. We can see comparatively to some publicly listed companies that are in our lane, Starbucks and First Watch, coffee and breakfast companies that are both sitting at about 1.9. Our brand is currently performing well above at 2.6. As we build the brand, we're only planning to increase those AUVs closer to the 3 million mark, which sits up there with some of the best in the industry. We operate at record profitability at about 19% restaurant level profits. As we grow, our operating leverage grows. Our leverage grows with some of our vendors. So we intend to get better deals, better margins, better supplying. Our restaurants are growing on a year-on-year basis. So the average across all of our restaurants is 35%. Some restaurants grow a lot, faster and bigger than that. Obviously, some of our newer restaurants, but on the average, it's 35%. We've got an incredibly high guest rating, 4.7 and above across all of our locations on Google. That really speaks to the level of execution on a day-to-day and the guest sentiment. So we're not just bringing in sales, but we're creating raving fans throughout the process. And some of our market studies show a long-term opportunity for Citizens is 500 plus stores nationwide. We know this because we're actively studying our existing markets and studying future markets to understand the white space of the brand. Some of our locations here across New York and Texas, we're now going to be in three major markets of New York, Houston, and Austin. So more to come, shortly announced. Some really beautiful pictures of our food and drinks here. Guys, we really focus on well-presented, fresh, and hot food. You can see the way our dishes are presented is so bright, so colorful, that we find a lot of our customers are typically taking photos and broadcasting on social media to all their friends. We don't really pay for marketing or have a fancy PR firm. We see that the product markets itself, and that's a strategy that we continue leaning into. Just a little bit more about our CPG. Some of the market studies that we're undertaking show that pod coffee is soon to overtake instant coffee in the US market. We're trying to position Citizens at the front of the pod coffee wave, Nespressos, K-Cups. So we see that we're going to really be at the forefront of this wave as it starts to take over the US market. Here's a little bit of humble bragging, some PR that we've received at Citizens. Again, we don't retain a PR firm. A lot of the PR comes organically to the company because of the day-to-day execution at Citizens. So we're super proud to really show some of these publications that a lot of us read on a day-to-day basis. Folks like Forbes, Gotham, Vogue, we've been coined as the two dominating the brunch scene in New York. There's some really funny taglines, but some that we're really incredibly proud of. Some brand highlights that we're super pumped up by, some best-in-class AUV numbers. We're on track to increase our unit-level EBITDA in 2025. In 24, at restaurant level, it's $1.1 million of store-level profit, and annual sales coming in at $7.2 million. We're now ticked over $30 million of lifetime revenue ending the 2024 year. So we're getting some really, really strong traction and momentum to really scale upwards. Investment overview. So this is a really solid look at where is the company going and what goals are we trying to achieve. We've got a 5-year roadmap here to get to 40 locations by 2029. That's how we're going to create a really strong sense of shareholder value, is by really increasing our restaurant-wide sales to about $150 million. So we know the markets that we're going to expand through. We currently sit in New York, Houston, and Austin. We know that some of the new markets we want to expand into is Dallas, DC, and Philadelphia. Andrew will take us a little bit through that. But on the screen, we can see the pathway of 40 locations, and we've got listed out in front of you the financing that we need to get there. So today we're raising $4 million to really start this next phase of growth. We know that we're going to need to do one additional round in around 2027 and 28 to really fuel the remainder of the growth plan. Upon reaching 40 locations, we know that that's a really sweet spot to explore crystallized moments for our shareholder group, and us included as founders. We know that reaching 40 locations is a really strong level of traction and inflection to explore acquisition and exits for really strategic buyers. 40 locations and $150 million of run rate sales between restaurant and CPG. It just shows a really high adoption rate across major markets. And that's where I think we can seek a really strong level of return for our investors. Here's some case studies that I think we pay attention to and we're always constantly studying. This shows similar brands in our lane that have reached similar levels of traction that we're aiming for in 5 years. and we can get a sense of their valuations and their multiples upon achieving that. So Blue Bottle, so folks on the West Coast and the East Coast will know very well this brand. So Blue Bottle Coffee was acquired by Nestle in 2017. A time in which they were acquired, they had over 90 locations and they estimated of annual run rate of $70 million per year. The acquisition was approximated at $700 million, which shows a multiple of 10x. So we use these as indicators and projectors of what our valuation could be upon reaching 40 locations and $150 million of annual run rate sales. Another great example is La Colombe. La Colombe was acquired by Chobani in 2023 for an estimated of 900 million to just below $1 billion. They had 30 locations and an estimated ARR of 200. So again, to put ourselves somewhere in the middle of these two, we're trying to get to 40 locations. We've got the roadmap. We know the markets that we want to be in. We understand the capital that it's going to take and the execution. And we're aiming to end up somewhere around this mark in 5 years. So if we get to $150 million in annual run rate sales and this level of traction, we believe that we can explore a multiple somewhere in the realm of what Nestle and Chobani have acquired these brands for. Our historical four-wall performance, you can see that as our sales have grown over the few following years, we can see that our EBITDA has also followed up to the right as well. So in 2023, we're under $1 million. In 24 was 1.1, and in 2025, we're aiming to really take that profitability well and beyond, $1.5 million with our organic growth and our new restaurant openings planned for this year. And guys, I'd love to just take a moment to pause and say, I hope a lot of that presentation gave everyone a strong sense of our traction today, where the brand is going, some of the key strategy in order to achieve the 5-year growth plan. I'm going to hand it back to Andrew, who's going to take you guys behind the metrics and explain a little bit more about our traction in terms of numbers and benchmarks, and then really look forward to fielding some of the great perspectives and questions that you guys have for us.
Awesome. Thank you so much, Justin. Appreciate it. Guys, thank you. Thanks all for being here. We're going to take a peek at the metrics at Citizens and learn a little bit more about our business model. Just before we get in, Justin did touch on this. I want to give a quick update on the investment progress of our Start Engine campaign. Guys, we're super excited. It's really starting to ramp up. I feel like it was only a week or two ago that we were just crossing that 500K threshold. We now already are just about to tick over 600K. You can see we're up to $593,000 raised. In particular, we've had a couple of really sizable investments come through, some important partners, investments of over 50,000. Just want to express a huge amount of gratitude to everybody who's come on board and everybody who's supporting this journey. It is the ride of a lifetime for me and for Justin and for everybody who comes on board as an investor in us. So wanted to say a big thank you there. Through this momentum, we actually were able to achieve Start Engine's most momentum category, which is the selection of the top 3 campaigns that had the most investment within the past week. So that's a really exciting thing for us, something to be quite proud of. You can see this is a screen grab directly from the Start Engine homepage in which we're ranked number 1 in most momentum. Additionally to this, we've now crossed over 950 followers of the campaign. And guys, this is really huge. Justin referenced it earlier. The most difficult part of the campaign is the start. It's the first 500,000, and then you'll find it generally compounds from there. There's a significant amount of people that have been following the campaign, showing interest, and traditionally, this last couple of 100,000 tends to go pretty quick. So we're really excited by the progress that's been made so far. It's only been possible through you all, through the support that we've had. So just super excited to give you guys an update on that. Additionally, a few things on the company side. Guys, it's been a handful of months in a row that we're just crushing sales, and I'm super, super glad to report that January has been such a great month for us. You can see the screen grab on the right, and this is referencing our January sales from this year versus our January sales from 2024. Guys, what we're seeing is nearly a 40% increase year on year. That is huge. The industry benchmark is about 5%. If you can do 5% year-on-year growth, you're ahead of the cost of inflation. And generally speaking, your business is ticking up. Now, to get anywhere north of 15 or 20% is just a mammoth feat. So for us to be sitting on 40% for January year on year, we're super proud of that. Justin mentioned the idea of humble bragging. And I think it's really important that we are giving these inflection points and showing that when things are going great, we want to express this. We want to express it to our investors and to our team, to be proud of the hard work that's being put in and to keep on charging ahead. Additionally to that, you guys who've been following us for a while would know that Austin store number 1 is getting close to completion. I'm there on site. I spend time with the builders, with the construction team, making sure we're going to deliver it and that it's going to be one of our best store openings yet. But we actually have another really exciting announcement, and that is we've just signed an LOI for our second store in Houston. We came to Houston in the middle of 2023 with our debut into Texas. That was a tremendous experience for us, and it was a real moment where we had to prove that the brand was portable and that we could take the success that we've had in New York and that we could go to Texas and emulate those results. Super proud to say that, that store is now a year and a half in. We live by the motto, you earn the right to grow. And we've spent 18 months generating fantastic brand equity, building ties with the community, and really, demanding that they want us to be there, and they've accepted us. And now we're super excited to be in this position where we can look at opening future stores in Houston. This is an LOI. We've had it signed and accepted. We now move into lease negotiations. It's a little too soon to go into details about where it exactly will be. But as this becomes more and more solidified and concrete, we'll be telling you more about that. And then finally, Citizens to date has been a breakfast, coffee, brunch brand. We have something really exciting in the pipeline, which is that we've been tinkering with what is a PM menu debut and a debut into dinner service. We spend a lot of time in the more recent months listening to our guests, listening to the people who know us best and understanding what they want from us. And we've been really, really rewarded to hear that it's not just breakfast. Our guests come to us because they believe our philosophy. They believe that food should be better for you. It should be presented amazingly. It should taste even better, and it should be accessibly priced, something that you can come to multiple times a week. This does not have to just be breakfast. And this is the real revelation, is that people are wanting us to stay open later. They're wanting to come and do a dinner with us. They're wanting to come and have more drinks in the evening. And we see no reason why Citizens can't be a smash hit as we go into the later fare. So Austin is going to be our debut into this full 3-day part service format. Now, if we can crack this code and really make it work, it will turn the economics of our business on its head in a very, very good way. Traditionally, restaurants that do breakfast and lunch would be extremely happy with $3 billion in annual sales. If we can crack dinner, it opens this threshold to us potentially being able to do 4 million and 5 million and beyond at each store. So this is an exciting development. We're obviously going to play it out, spend a lot of time honing this and understanding how the customer responds to it. But I wanted to give you guys those updates. All right, so behind the metrics, let's talk about a couple of things about the way the business ticks and the way we look at expansion. We're going to be talking about our compounding economics, understanding like the cost of a Citizen store and how that intends to grow. We're looking at our sales, breaking down where our sales come from, in which departments, and understanding how that functions. And we're going to be spending a bit more time looking at the roadmap to 40. Compounding economics. So I think as we are on the precipice of expansion, it's really important to understand, how do you deploy your capital effectively? And this is where we're able to use one of my unfair advantages. My background in architecture and design really has put us into a position where we're able to do something called value engineering to a degree that most of our competitors don't. And what I mean by this, it's very easy to open expensive restaurants. They go over budget all the time. You can overspend on materials. Generally speaking, it's something that can become an expensive exercise. Now, with really, really strict value engineering, it's running every decision of our new store rollout process and saying, where do we spend money to get a really good return for our customer? Is our customer really going to know or care if we have $200 a foot marble countertops? Or are they going to really, really care about something that's more tactile, like ensuring that the experience is great, ensuring that the seats are really comfortable? And this is something that we take a lot of pride in. If we go back, you can see that to date, all of our stores have been executed on a budget between 250,000 to 500,000. Why this is really important is that in restaurants, one of the leading indicators of success on the economic side is cash on cash return. How long does it take you to pay your restaurant off? The sooner that a restaurant does pay itself off, it's compounding cash and it's generating cash that can be used for future openings. So we have a goal that if we can keep our build cost low and approachable, we can leverage my experience in the field. It means we can pay our stores off sooner, and we can have the ability for those to then pay free cash flow to open future stores. Another big part of our tactic is leveraging existing second gen real estate. What this means is, again, if you have to walk into a space and build all of the mechanical infrastructure, you're building basically a full space from a white vanilla shell. It can get quite expensive. You're leaving a lot of room for risk. There can be a lot of unknowns in the variables of the construction. So to date, we've really been examining opportunities that already have a lot of the infrastructure built into the model from a former tenant. If a space already has the bathrooms plumbed out, maybe it already has a bar, maybe it has a kitchen in the format that we like, we can retrofit a lot of these mechanical infrastructures to fit the Citizens model, and it costs us only a fraction of if we had built it out from scratch. So these are a couple of the things that we actively consider and pursue when we're looking at our expansion model. Of course, it doesn't always work this way, and as we build to a pipeline of opening 40 stores by 2029, we are going to have to move at a velocity that allows us to build new sites. It's not that it's not in our arsenal, but I think being really responsible with that capital is one of the best services we can do for our company. Next is understanding our sales. Guys, for those of you who have been to Citizens, I'm sure you understand this quite well already, but to the people who are still learning about our brand, it sometimes can be difficult for them to fully understand who we are. Are we a coffee shop? Are we a cafe? Are we a restaurant? Are we a bar? And the truth is, this is what's wonderful about the Australian cafe concept. Like Justin mentioned, it's a dynamic service format. You can see when we break down our sales, 70% of this comes from food. And this is really important. Food really drives average ticket up. And in comparison to a coffee shop, in which you would only have maybe $4 to $5 in average spend across a coffee, maybe a pastry as well, we can achieve an average check between $20 and $25. And why is that? It's because people come to us for a full experience that includes a plate of food, priced still in an accessible format between $15 to $20, and they'll often pair it with additional services we offer, such as coffee, non-alcoholic beverage sales. You can see that accounts for 80% of what we do. Things like our premium espresso, we do wellness lattes, we do fluffy juices, quite a wide range. And then finally, alcohol sales. Alcohol sales are something that have been rapidly growing in our business. Since the Texas debut in 2023, we've reinvented our cocktail program. We built a wonderful range of boutique, fluffy juice cocktails, super fresh, super vibrant. And that's seen that sector of our sales increase from what was traditionally below 10%, closer to 5%. Now it's up to 12%. It's important to understand each of these factors is really important for us to get to our average sales that Justin was referring to of 2.6 million. But we're seeing that these sectors are extremely profitable. Anyone in the industry knows that alcohol is a hugely profitable sector. The product doesn't spoil, it's shelf stable. And if you examine the ingredients that we use in an average breakfast, there's not a lot of expensive proteins. It's a lot of bread, eggs, greens. And this sort of stuff is not that expensive for us to source and find. We can get really, really good sourcing to lock in high quality at a great price, but the margins are strong. And I think this call, obviously, about the metrics of Citizens focuses a lot about profit and the business in an economical context. We, of course, are obsessed first and foremost with the experience of what we do, and we love what Citizens is. But the truth is, for us to grow and for this to be a venture that can continue, it has to be profitable. So we've spent a lot of time considering this and honing how we can make the concept profitable in a way that we can continue to grow. Building systems for a profitable business. All right, so if we break down some of these ideas that I just mentioned, breakfast, coffee, and alcohol are among some of the highest margin items in the food and beverage industry. Then it comes down to us to really manage our costs well. It's an immediate thought that people say, rent must be one of your biggest costs as an operator. Rent is a cost and it's a significant one, but it's certainly not the biggest. There's two other really, really important cost sectors that we focus on so tightly because they're truly within our control and they're normally double what your rent or occupancy cost would be. And that is cost of goods sold and labor. So for those who don't know cost of goods sold, it basically references any of the products that we have to purchase in order to sell the product to someone else. That's attributed to your cost of goods sold. Now, we as a business typically see that's about 25% of our costs, and same with labor. Labor, as in paying our staff and making sure we have an amazing team of people ready to go on any given day of service, costs about 25% of our income. So for every dollar we bring into the business, that accounts for 50% of it. Justin and I have become obsessed with understanding these elements of our business and understanding how we can influence them. They're both completely within our control. We have many tactics that we have been refining and dialing over the past 8 years of business in order for us to really perform at a high level in these two sectors. So what does that leave at the end after you've considered all of your costs? Justin mentioned earlier that our stores can do up to about 20% in store level profit. So if we're examining our best performing restaurants that are doing 2.6 million or above, that produces about $520,000 in store level profit. Why is that important? We spoke about the idea that we're operating on these micro build out costs, that we've been executing stores for anywhere from $250,000 to $500,000. Granted, for us to hit 20% in store level profit and do $2.6 million, that's a mature store, right? We're not doing that in year one. But you can see how quickly the economics can compound in a successful, mature store. Basically, this is saying for each one of our successful stores, once it's mature, it can pay for 1 to 2 more stores per year. And this is the part that if we stay really focused on operating fantastic restaurants, continuing our growth, and ensuring the cost structure is correct, they will start to compound. 3, the pathway to 40. So this is a really common thing, a common question that we get, I should say, is how do you get to 40 stores? And it's a really, really good question. We need to show a high level of thinking and a restraint and a deep understanding of what our real estate and growth strategy is. So I'll start by saying, anytime you transport a brand, you're eating inherent risk. When we were operating in New York City and we decided to launch in Houston, Texas, that was, understandably, a risk for our business. But it was one that we were extremely willing to take because we knew if we're able to successfully crack Texas and prove that it's a market that we're going to perform well in, all of a sudden, we have a significant amount of white space that we can look to grow in and infill. And that's the strategy that we have for 2025 and 2026. Justin mentioned that we are in markets that we really love already. We're in New York City, we're in Houston, we're about to launch in Austin. And across these markets, if we're going to continue to compound, open future stores, we're going to see our economies of scale really start to get leveraged, and we're going to be able to scale our infrastructure and actually leverage the corporate team within these markets. This is the strategy for the next 2 years. We double down into Houston, Austin, and we look at Dallas as well. New York City, we continue to grow. And this is enough white space for us to get the company to $50 million in revenue. Then we examine what the deeper plan is. As we get to 2027 and 2029, and when we're really putting the accelerator on, you still continue to grow in these markets, but then it's time to do what you call concentric expansion growth. And this basically means one of the most respected, safest ways to grow is we go concentrically in a circle from the base. And this will open opportunities on the East Coast side, things like DC, Philly, Boston. You've got things like New Jersey, Long Island, Connecticut. These are the sorts of markets that we'll slowly start to expand into. We already will have a firm base planted on the east side of the coast, and we'll have infrastructure that we can leverage across. The same process will happen in the South. We'll see Southern concentric growth. We'll see us enter markets like New Mexico, Arizona, and Oklahoma. And all of a sudden, you can really start to see this deeper white space of how we not only get to 40 units, but a really clear pipeline of how that gets to 80 and how that gets to 100. It's not lost on us that America is a huge, huge country. And if we can be really successful in a tier one metropolitan city like New York, and if we can be really successful in more emerging and quickly growing markets like Houston and Austin, it paints a picture that this is not specific to a geography, that it's really specific to an idea that the American consumer is shifting. They're demanding more from what they eat. They want to feel better about what they eat, and they want it to be wrapped in an experience. It's amazing. And that's our ethos, that the brand has legs to be successful in many, many states and cities in the country. Guys, that takes us to about the end. Thank you so much for being with us today. And